Hello and welcome to Commodity Champions. I'm Manisha Gupta. And 2024 was a volatile year for commodities as tensions in West Asia and elections across major economies like the United States, India and European Union shaped the market sentiment. Rate cuts by global central banks and safe haven buying supported gold and silver, while incoming US President Donald Trump's pro-America policies put pressure on other metals. The crude oil prices also saw extreme volatile moves on the back of geopolitical tensions and weak demand coming in from China. Many of these factors are expected to continue to impact the prices of commodities in the new year as well. Joining us then to take this discussion outlook for 2025 are Ajay Kedia, he's director at Kedia Commodities, and Dinesh Somani is founder at Intellitrade Services. Gentlemen, hi, thank you so much for joining us. Well, I'll start with the metals as a sector. And Mr. Kedia, when you look at the overall sector, we've seen an outperformance come in from zinc, and copper, which is also called the doctor copper, didn't actually end up giving us better returns there. How would you look at overall base metals as a space? What are the fundamentals that you will watch out for 2025? And what is a top trade that you would want to give in this sector?
Very good afternoon, Manisha. If we talk about 2024, definitely is going to be a very important year as we are very near to close 24. But I think it's very good for commodity. We have seen almost double-digit return in every commodity. Like bullion, we have seen around 20% gain. No doubt, base metal, despite of hindrance from the economy growth, Chinese economy, how it will be performing from Western sanction. Now we are seeing, despite that, we have seen zinc prices gain almost 20%, aluminium around 19%, lead was slightly oversupplied. That is why prices was been slightly negative. Definitely, Dr. Copper were expected to test around, let's say 11,000, 11,500, but consumption cycle not picked up what all were expecting in 2024. But I think 25 is going to be a fabulous year because one side we have a geopolitical tension from Russia, Ukraine, Middle East that can impact the consumption cycle. Secondly, Donald Trump, or we can say Twitter Trump, because still in last 5 days we have seen n number of tweets coming back from Donald Trump. So let's just imagine after 20th January how much this type of alert would be there and impacting the global scenario. But despite it, I think with the rate cuts globally, all central banks have started cutting down the rate. I think we are more bullish on metal like copper, zinc and aluminium. No doubt surpluses would be there in second half, particularly for aluminium as per new latest report, and zinc also. But first half is going to be a very tremendous for metal. My first preference would be zinc, which is consistently holding very well. Still YTD, we have got a return of 20%. So we expect a level like 270, 72 is good to buy. Higher side, maybe a level we can presume for zinc should be around 340 on higher side, whereas aluminium may retouch the level of 300. And last would be the copper, conservatively, but we can see a level towards 1100 because consumption or clean energy or EV demand is going to be positive with the rate cut we have seen from major central banks.
Mr. Somani, same question to you as well. Where do you see metals performing in 2025? And would you also want to divide the year into two? And the other point really is that even as the international markets have seen gains, but the Indian prices clearly have gained slightly more because of the rupee depreciation. Is that a phenomena that you see continuing in all of 2025?
Yeah, definitely. Good afternoon, Manisha ji. And we saw copper starting the year at 730 levels in MCX and then get up to 965 levels, a gain of almost 30%. Then the dollar index emerged out of 100 points from 100 to 107, 108 levels, almost 8% gain. And the base metal prices collapsed from all-time highs. We saw copper falling from 965 to 765 levels and then just consolidating around the 765, 865 range. I don't expect a much move in copper in the initial first 3 months of the new year. I expect a range of 765 and 865 over the next quarter. But slowly and steadily, I think prices could move up. The base metals that could emerge out of this is zinc. I expect the zinc prices to bottom out around 265 to 70 levels. Upside could be 330 levels. We saw prices coming out from 230 level to 300 in the last year, a gain of almost 30%. And we expect the momentum to continue to this year as well. Of course, the USD INR added premium to the prices, but zinc still thinks to be a strongest out of all the business.
Mr. Kedia, this usually is a trend that as we get into the month of January, by the second or the third week of Jan, we do see a lot of funds and money managers reallocate their funds into various asset classes. Now, because 20th January is going to be such an important date, are we looking at a delayed allocation this time?
Definitely, because the election outcome was totally surprise. No one was so much excited, but Donald Trump victory is going to be a game changer, especially from a geopolitical point of view. We have already seen every day the tweet for Middle East, tweet for Panama Canal, tweet for Canada, tweet for Greenland is continuously with that. So I think people will wait definitely up to 20th January what will be the policy. But one thing is very much clear. He is more concerned about the economic growth, particularly for dollar. And secondly, whatever the step, previously we were also expecting the trade war would be there, inflation would be on higher side. But see, I think this is just like we can say one of the tool used by Donald Trump. Either get ready for war, otherwise increase our duties, or there would be a decrease in any cost. So I think the tool that Donald Trump is using is fabulous, and maybe that could be a bigger trigger for dollar index. And as of now, dollar index is trading very well above 200-day moving average. And as we know, when dollar is been on higher side, commodity generally trying to perform slightly on lower side. But I think one should wait up to Donald Trump to be in office, and then allocation would be there. Carry trades might be up till now till 24th. We have not heard about a major big carry trades as of now. So I think big fund houses are still waiting what will be the decision, what will be the approach by Donald Trump. So I think one should wait to see how the carry trades will perform in first month of 2025.
All right. Mr. Somani, this one is to you. Well, of course, we will be watching out for what the Trump does in sense of trade and tariffs. And the other thing is going to be about China. What, apart from these, would you want to watch out for in 2025? Is it still going to be about what the banks do in sense of interest rates, or the geopolitics on the other side, the currency on the... what are you going to watch?
Of course, the geopolitical tensions are going to be there this year. It was, I mean, there was all around the geopolitical tensions were rising, whether it was Ukraine or the Russian or the Gaza and everything. There was a misconception. Still, crude prices were hovering around the same level because of the demand concerns. But the other thing which I would like to look at the currency levels, which was trading around in the Indian market, the USD INR was trading around 84.20, 84.30 levels, which moved up almost by 1% to 85.20 levels. And we expect the rupee to depreciate further to 86, 86.50 levels. So that would be the thing to be watched out, because major currencies, they have depreciated against the dollar, and similar thing is to be expected in Indian rupees as well.
Fair point that. Let's talk about energy markets now. And Mr. Kedia, we've seen crude oil prices head for a negative year, but the best performance clearly came in from natural gas. And the kind of trade that we saw on sell in crude and buy gas, do you see that playing out yet again in the next year, or do you see some deficits build up when it comes to crude?
Yeah, I think energy market already we have seen the performance was not so much aggressive. What we have seen other commodities like crude prices since January, we have seen unchanged, almost 6,000 on MCX. Brent is lingering near to 72, 73 only. Whereas natural gas has totally surprised in the line of expectation. Still, I think steam has been there with natural gas as an alternate fuel. Right now, it's around 315, which is around closer to 50% mark for natural gas. So I think 2025 is going to be an important year, because one side we are talking about the economic growth, economy recovery, with central bank taking utmost all steps to support the economy. But on the other side, China in 2024 has taken all steps. Everything was been on the table, but despite that, demand has not at all improved. On the other side, supply would be more important, because US has continuously trying to push their export in a global market, and that is why in 16-17 also we have seen Donald Trump has put the sanction on Iran so that he can make his space in the energy market. And this time also we expect US is going to create his space. So one side demand concern would be there, other side supply concern, oversupply concern would be there, which means prices is going to be on a volatile side, whereby we expect 63, 64 is going to be a very good support for Brent. Whereas on the higher side, definitely geopolitical triggers would be important. Let it be upcoming China, Taiwan, or maybe Middle East will continue to be there, Russia, Ukraine. Donald Trump has already concerned that we would stop this war. But I think with the ongoing trades, higher side could be around 80-82 as of now. Coming on the natural gas as an alternate fuel, we have already seen a very good rally. But as compared to storage capacity in Europe, we are still 4% higher YOY if we compare. So I think important would be the Russia and European contract, because that is going to be end by 31st of December. If it is not renewed, then definitely there will be a still shortage of natural gas in European nation, and definitely that can trigger the prices to the level of 6.5 in international and domestic side. Maybe level like 500 plus could be possible. So it will be much important in next 7 to 10 days whether it will be a shutdown case or it will be a renewal case. That will decide the natural gas future. But overall, I think crude is going to be slightly sideways to negative, we can say, but natural gas on as per the ratio, we expect is going to outperform crude oil prices.
All right, something that will continue in 2025 as well. Mr. Somani, this one is to you, and I want to talk about silver because we did see all-time highs in the Indian markets, but a 12-year high in the international markets. Now, the Wall Street banks and brokerages are betting much higher levels of 38 to 40 for 2025. What is your sense?
Definitely, Manisha ji, we saw the year starting at 72,500. It tested the magical figure of 1 lakh rupee and then collapsed almost a gain of 38% in the year. Then it collapsed almost by 13.5% and tested 86,000 levels. Prices are consolidating between 85,000 90 levels. But I think overall it could test around 83, 84,000 and then renewed buying would emerge out. Prices may cross 1 lakh level again, might test 1 lakh 8,000. In the international market, I expect 29.50 should be the downside. Upside again 34 and 38 levels should be tested. Overall, the picture looks good and silver could be a better performer because the spread between gold and silver, it was earlier 24,000. Now it has drastically reduced to 13,000. We expect the spread to again move to 24,000 level from here onward. That indicates silver would perform much better compared to gold.
All right, there you have strategies all ready for 2025. Zinc is a definite topper here. And then there are buying recommendations also coming in for aluminum. You also have silver and, of course, natural gas prices at top gainers here. Thank you so much, Mr. Kedia, Mr. Somani, for joining in and preparing that portfolio for 2025. Well, with that, it's time for a break, but don't go anywhere. We will be discussing the outlook on gold on the other side. Welcome back. You're watching Commodity Champions, and let's shift focus now to gold. The precious metal is headed for its best year since 2010. It hit a fresh record highs of $2,790 per ounce earlier this year. And to discuss the outlook of gold, I'm joined by Amit Goel. He's co-founder and chief global strategist at ThreeSixty. Amit, hi, thank you for joining us. And yes, all-time highs and then correction as per our latest conversation. But from now for 2025, what is it that you're watching and where do you see gold prices going to?
Hi, Manisha. Merry Christmas to you and all the viewers of CNBC TV18.
To you too.
Thank you. So for gold, Manisha, there are quite a few factors that I would want to talk about. So there is this dollar index, which is, of course, one of the most important factors which determines what's going to happen to gold. And we know that dollar index has been skyrocketing ever since Trump's odds of winning the election started going up in October. And from levels of about 100 in September, we are now at 108.2. So dollar index has come up a lot and gold has more or less weathered this storm pretty well, I would say. Then there are US bond yields, which have also been on a tear for the last 3 months. And whether it is US 2-year bond yields or 10 years, 30 years, all of them have come up a lot. And many of them are now close to 1-year, 2-year highs. So this is the second factor. Third factor is USD JPY. We all know that JPY and gold are basically two currencies, so to say, both of which give 0 to negative yield, while currencies like dollar, like euro and Canadian dollars, all of them give a positive yield. But gold and JPY do not give any yield, at least so far. Maybe the Japanese central bank raises the rates a little more in the next few months.
Sure.
But as of now, yen and gold are correlated, and yen actually has done pretty badly this year, and it is now close to its 3-decade low. So this is also a relevant factor. So if you combine all these macros and plus the fact that the US economic data has been extremely strong from October till about December first half, but has just begun to worsen a little in the last week to 2 weeks. So what I'm trying to say is that the macro picture of for gold was pretty much at its worst in the last few months when dollar index was going up, US bond yields was going up, yen was going down,
Yeah.
and US economic data was extremely strong. So gold has pretty much weathered that. The macro outlook going forward is somewhat better. We believe that dollar index is actually going to go down from here in the first quarter. We believe that US bond yields are close to their top. We believe that yen is close to its bottom.
Okay.
And the US economic data has already started worsening in the last week to 10 days. So this is a great macro backdrop for gold. Now coming to the prices. See, if you look at gold between October and November, you saw a very sharp correction when it went down from 2790, which was its all-time high in October, and it went down to 2535 levels in November second week. So my sense is that the level correction is more or less over on gold with that down move of more than $250, and that just happened in a time frame of 2 to 3 weeks.
Sure.
Level correction is more or less over. The macro backdrop is actually improving, but I still believe that the time correction still has to happen in gold. And you very well pointed out that 2024 is one of the best ever years on gold in last many years.
Yes.
And plus, between October of 23 to October of 24, gold went up by more than 50%. So there are a lot of excesses in gold which have been committed over the last 4 to 5 months. I think those excesses, some of them have been washed off, but more of them have to be washed off in the next few months. So my sense is that the level correction is over. Time correction will probably play out over the next 2 to 3 months.
Okay.
Global macros in 2025 are looking to be much better than what they were in the last few months. So this time correction is also over in the next 2 to 3 months. I think the decks are all clear for gold to rally substantially in the second half of 2025.
Amit, when you say substantial, what are you saying? Because I'm still looking at 3,000 and 3,200 on the higher side coming in from various banks.
So my sense is that it will be difficult for gold to break 3,200, which is the higher end of the target put up by most of these Wall Street banks.
Yes.
I think that is probably, it will be tough for gold to cross that level in calendar year 2025. But more importantly, I believe that investors should start buying gold on every dip now. And I would want to point out one more factor, which is the central banks. You know that the central bank buying, particularly the Chinese central bank, has waned. It has faded in the last few months because of the high levels on gold. But in the last month, in November, Chinese central bank added a bit of gold because gold went down all the way to 2,535.
Oh, yes.
My sense is that below $2,600 an ounce, central banks will become more enthusiastic buyers, and they will buy, their buying intensity will go up as gold corrects further from $2,600. So my sense that 2,450 to 2,500 is a very, very solid support for gold. I don't see that support breaking down.
Okay.
So you need to buy gold on the way down from 2,600 to maybe 2,500. You need to hold it because the next 3 years, I'm very positive that we will not only break 3,200, we'll actually even break $4,000 over the next 3 years. But right now, I think we have a bit of consolidation which is ahead of us.
All right, those are big numbers coming in from you, Amit. But as always, more often than not, you have turned out to be very, very true, very, very correct and accurate when it comes to these ones. So we'll follow out for 2450 on the lower side and 3,200 on the higher side. But the next 3-year bullish run clearly will have a lot of investors coming into this space. Thank you as always for joining in and making sense of what really is happening into gold as a market. But with that, let's tell you that Tata-owned jewelry brand Zoya now has its footprint in Eastern India. It opened its first store in East India at Kolkata's upscale Shakespeare Sarani. Tata Jewelry CEO Ajoy Chawla and author and jewelry designer Twinkle Khanna unveiled the boutique store. Let's listen in.
Zoya has been playing the role of creating very meaningful jewelry, meaningful luxury, and almost I would say it's wearable art. Customer is seeking a certain depth of design and certain meaning in their jewelry. And Zoya is perfectly positioned to actually create that impact for that customer segment. Trying to expand its footprint to wherever this HNI segment is present in threshold levels. Today we are present in the top 8 towns. I think in the next 4 or 5 years, we could see these expand to at least 12 to 14 towns. Gold prices are always on the up. I think the last 5 or 6 years have seen a secular trend. You know, it's been a CAGR of something like 18-20% consistently. And I think with uncertainty in the world going up, with so much geopolitical tensions, with so many changes in the political arena that are taking place across the world, I think gold becomes a safe haven.
What's really interesting is they have even patented cuts, like this is called the bloom cut. And I think the other thing that I really like about what Zoya does is this juxtaposition of modern and traditional. And the jewelry is immensely wearable. You can repeat it and you can wear it, you know, for different occasions. And I think that is quite remarkable.
All right, as we end this segment, and you know, it really is about gold, the kind of returns it has given, and of course, more and more companies now expanding, opening more stores, and more buying and investments happening in case of gold. But with that, that's all the time that we have on this edition of Commodity Champions. Thank you for watching.